Live update. This is your 2026 Market Regime Desk checking in. Here's the headline. 2026 looks less like a runaway bull year and more like a slowdown plus easing drift environment. Translation. The market can still rally, but it's not free money. Expect rotations, sharper two-way moves, and more trap behavior around macro releases. Now, the key point. This is a regime lens, not a prophecy. We're not trying to predict every tick. We're using the environment to decide which instruments are most likely to offer clean, high-quality opportunity. Here's what the forecast implies at a high level. Growth cools, inflation hangs around the 2 to 3% zone, unemployment drifts a bit higher, and rates trend lower across the year, while equities are expected to be choppier with a lower drift than a rip-your-face-off bull run. So what does that mean for our main instruments? First up, 10-year notes. 10-year notes is the most structurally aligned with an easing, lower rate drift backdrop. If rates are trending down over the year, 10-year notes often becomes the cleanest macro tailwind canvas, meaning it can offer more consistent swing behavior when conditions are right. Second, gold. Gold can benefit in two different ways. Easing conditions can be supportive, and risk-off spikes can also support it. The catch is gold can be headline sensitive and move fast, so it's the kind of instrument where selectivity matters even more. Third, equities. S&P 500, NASDAQ, Dow Jones. In a slowdown plus easing transition year, equities can still rally, but they're more likely to be two-way, program-driven, and prone to sudden downdrafts when data surprises hit. NASDAQ tends to overreact, Dow can rotate differently, and the S&P is the cleaner benchmark. But the main message is equities are conditional, not automatic. So my posture for 2026 is simple and brutally practical. Base case is balanced and rotational, with easing drift underneath. That means 10-year notes as primary focus, gold as a strong secondary, and equities as trade them when they behave. Otherwise, stand down. And here's the one rule to end the update. Trade the instrument producing the cleanest permission, not the instrument you want to trade. In the 2026 environment, clean confirmation beats opinion even harder than usual.